Hello and welcome to all of our viewers. I'm your host, Gautam Srinivasan, and today I will be speaking with a very special guest on a very relevant topic titled Are Flexi Cap Funds a Good Investment Option in Volatile Markets? To set the context, capital markets have seen a high degree of volatility over the past few years, owing to multiple factors, including the COVID-19 pandemic and the Russia Ukraine war. Now, financial experts are expecting further correction in 2023 as a recession seems to be looming over the US, which could likely have some impact on the Indian markets as well. Now, in such times, flexi cap funds could be viewed as a great investment option since these funds invest into equities of a range of companies across market capitalizations, whether that's small cap, mid cap, and large cap. And that spreads out the risk and lowers the impact of volatility on investor portfolios. Now, their advantages are further underlined in today's times when investors realize the value of flexibility and agility in every sphere of life, including investments. So, today's discussion will delve into what are flexi-cap funds, how they differ from multi-cap funds, and why they could be a good investment option in bear markets that we seem to be headed into. Now, this session has been brought to you by Mirae Asset Mutual Fund. So without further delay, let us welcome our guest for today's discussion, Mayuk Datta, Head of Product for Strategy and Communication at Mirae Asset Investment Managers India Private Limited. Mayuk, thank you so much for joining us on this talk.
Hi, Gautam, and thank you so much for having us for this conversation. Let's hope we make something good out of this for all the audience.
Absolutely. It's a knowledge exercise, so we'll try our best. So let's start with the fact that flexi-cap funds, they typically invest into companies, as I said earlier, with varying market capitalizations, whether it's small cap, mid cap, and large cap. And depending upon their performance, things pan out. So how does an investor stand to gain from such an investment?
So many times when you look at the whole equity universe to invest, whether it's domestic, internationally, the most relevant question becomes where to invest, which size, which sector, and so on. So basically, while a mutual fund is something which the investor is looking for as an investment solution, the options may tend to make the decision making very difficult for a normal investor for most of our audience. In that case, a flexi cap fund, as the rule of the land so says, can invest across sectors and across size of companies, which is our language in that would be market capitalization being a large cap or a mid cap or a small cap company, or which sector it should invest in. A flexi cap fund, therefore, has the flexibility to invest in any of these sectors, any of these size, and therefore the fund house and the fund manager is able to make that decision making for investor. What the investor therefore does is stays invested in the fund, and the investment decision of where the money goes in is based by the realities or the data points of the market at any point of time, and therefore they are able to invest. So the fund manager is able to take that call for the fund house, for the investor, and the fund house is taking that call on the basis of what the current metrics or data points or the volatility, as you discussed in your opening statement, could be one of the reasons. It could be many other factors which you could look in, and the flexi cap fund allows you to be flexible across categories. Were you to be invested into a specific sized or a sectoral fund, it comes with its certain limitations. Not that they are not right, they are also relevant in the portfolio. But for a core portfolio for anybody, this becomes important because this is literally a go anywhere, can do anything fund.
In a sense, it's an all-rounder, to use the cricketing analogy, and it gives you the flexibility. It can go hammer and tongs, and it can play defensive when the situation requires it. So Mayuk, a common question that is asked to this regard, the difference between flexi cap and multi-cap funds. Could you shed some light on that as well?
Sure. So these, while the scheme categorization was given by rule from 2018 onwards, it's only in 2020 and implemented from 2021 that there is a specific category, which are two distinct categories now, which is the flexi cap category and the multi cap category. Very simply, I talked about the flexi cap fund, whereas all the flexi cap fund needs to do is stay invested minimum 65% and above at all points of time into Indian equities. And after that, there is no limitations in terms of any sector or size, which is market cap limitations. That while in a multi-cap fund, it is clearly said that at every point of time, minimum 25% and more should need to be invested into large cap, mid cap, and small cap. So 25% each into at all points of time into mid, large, small, and the balance 25% is the fund manager's discretion, where they are able to see where they would like to stay invested. So a multi-cap in that sense gives you equal participation into all the three minimum has been set, and the balance is as per the fund manager's call, and rightly so. In a flexi cap, it is absolutely the discretion in terms of there is no limits to any of these sectors or any of the caps being as it is in multi-cap, and it is therefore an all-rounder. As you said, it can go anywhere and play any role and stay invested in any of the sector or market caps. Multi-cap has this minimum, so it's like, let's call it as a 25 25 25 into each, and the rest 25 is your call. In there, it's totally your discretion of 100 rupees allocation percentage going where you see that there is value or growth in the current circumstances.
All right, we'll call a multi-cap fund a middle order batsman to clarify. All right, looking at the points that you mentioned, especially around the flexibility that this product brings to the table, I want to understand from you, and for the benefit of our viewers, what kind of investors are these funds well suited for, and how long should the investment horizon ideally be if you decided to go for the Flexi Cap Funds route?
Okay. So I'll take the second part first and say that what should be a tenure. I think all tenures for all investments should be in line with their investment goals. So, and depending upon the tenure of an investor, you tend to choose the type of funds you would look to invest in. A broad rule of thumb would be longer is if you are investing into equity, it should be for longer tenure. And by longer tenure, I would say that probably 5 years and beyond is a good time to consider equity funds for your goals, which are beyond that. Anything lesser, the equity portion in your investment scheme should be lesser, because equity tend to be volatile or considered slightly has this far more movement in the near term, but over a long period of time, equities tend to be slightly better than the other investment options. That's the rule number one, I would say. The type of investor who should consider flexi cap funds, I think it is the most universal category which should be for all sorts of investors. Predominantly among that, I would say that two type of investors should be considering flexi cap funds. Anybody who is new to mutual funds, doesn't know which cap or which category of funds is relevant for them, they can literally outsource that decision making to a flexi cap fund, because they are able to because the fund house and the fund manager is taking that call for that investor. So anybody new to mutual funds should consider flexi cap funds, because it is taking care of a lot of decision making. Beyond that, then as your portfolio or your investment experience evolves, you could look at market cap funds and other categories and so on. But a starting investor could consider flexi cap fund as one of the starting places. Secondly, I would say it is for anybody who is looking to create their core portfolio. Now, it could be a new investor. It could be somebody who has been in the fund, has been investing, would now like to consolidate. So when you are looking at your core portfolios, a flexi cap fund merits a decent allocation in that thought process. Your satellite allocations could be themes, could be sectors, could be international, could be various other things. But your main asset allocation, which is your core, within that, what is equity portion, a flexi cap definitely merits a large part of your allocation, because then it is taking care, it is ensuring that you get a decent equity participation in your portfolio, but where it needs to be invested is being taken care of also, depending upon what the market conditions are. So I would say these are the two main type of investors I can think about it. The first one being more universal. Anybody new should consider flexi cap funds. Anybody trying to create a core portfolio should consider flexi cap funds within their equity allocations.
All right. To expand on some of the points that you have mentioned, especially with regards to market condition and the broader economic environment, because we do see inflation on the rise and thereby interest rates are also going up. So, in this context, Mayuk, how relevant are flexi cap funds in today's volatile times? And do you think they help mitigate risk and lower the impact of market volatility?
Yes. So let me, Gautam, answer that with a simple example. Let's say I'm in a certain fund where the companies tend to carry a slightly more leverage or debt in their books. Now, like if it were personally you and I were to be invested, let's say if we were a non-individual entity and we have loans in our hands, let's say home loans have increased in the last calendar year, there the home loans have gone up. So our outflow towards a certain loan is actually increasing. This could be true for a business also, that they also have loans and those loans are going up, and therefore the cost of servicing those loans have gone up. Therefore, their profitability will come down, assuming income remains same. Net left in hand is slightly lesser. Now, in if this is a certain cluster of companies, there could be a chance you may not want to invest into them right now. So in a flexi cap fund, you have the flexibility, therefore, to reduce the holding into such companies and increase the holding in the other companies, which still would continue to earn even if interest rates were going up. So it's a volatile situation. So with one metric only, you could judge companies to be doing better right now or may not do better for a short period of time. Now, in if there is this is a cluster of companies, if or investment options, possibly they may not be so much in fashion right now. They may not be attractive right now. While in a flexi cap fund, the fund manager clearly has the flexibility and the freedom to be able to look at businesses which can still do well in a rising interest rate scenario and consider increasing or investing into such investment ideas going forward. So, depending upon the metrics or the macros at every point of time, flexi cap funds allow you the flexibility to change the investment decisions, or the incremental money can be invested into ideas which are relevant at this point of time. Maybe that option is also available with other investment options or other scheme categories, but there the flexibility could be little lesser.
Hmm.
Here, the flexibility will be much more. So you have more shoulder room to be able to invest as per the data points of the current time. And as the data points change, if your investment decisions were to change, you can again execute it better in a flexi cap. So at all points of time, you have the shoulder room to take investment decisions based on current data points. And that is the benefit what a flexi cap brings to the table. We can keep on going on different. The same could be different that when interest rates were to go down, you look at companies where their incomes will go up and therefore have the flexibility to move to them. Like here, if
Hmm.
they may be slightly out of fashion, and then you can say that they are now slightly back in favor. So that's the flexibility what a flexi cap brings to the table.
It helps you keep up with the trends, whether it's economic or market related. But given that flexibility is great for adjustment, viewers would still like to know, the risks that come with an investment into FlexiCap. So, your thoughts on that?
So the risk which are there for any equity investment remains true for also for a flexi cap category, and it is true for all equity investment classes. Sometimes in flexi cap funds, possibly the risk is slightly reduced, not very heavily, but slightly reduced for the fact that these are very diverse in nature, and therefore the diversification brings with it a certain amount of risk mitigation also along with it. These are not typically very concentrated portfolios. They are spread across all the market caps. So if there is something which needs to be managed in terms of allocation, having more spread across size of companies, types of companies, and I said about, just like I gave the debt example and others. So therefore, the risk can be managed. Imagine if I were to be staying invested into a sectoral fund, my risk would be slightly higher. Why? Because my investment experience is dependent on how that sector will behave in the next 3 to 5 years. But here, the risk can be managed, that you can get, if the data points change, you can manage the risk accordingly. But that is just a risk slight reduction exercise. It's not a risk thing. It carries the same risk as there it is there in equities as an asset class, which I would say that over a period of time, that risk actually comes down. So time given to equities is the one of the better ways of managing risk.
All right. Now, in any conversation around investments, how can taxation be behind? So, just to get your perspective on, how flexi cap funds are taxed.
I think flexi cap funds are taxed exactly like your equity capital gains are, which is you have a short term capital gains, which is for 1 year and less than 1 year. And beyond 1 year, it is you are taxed as per your long term capital gains. So, like every other equity investment on equity mutual fund, flexi caps are also taxed accordingly.
All right. Now, to boil down some of the points that you have discussed for someone who's just tuned in, as an investor, what factors should an investor consider while choosing the right flexi cap fund? If you can boil down some of the points you mentioned earlier.
So I would look at a couple of 3 or 4 points for any investor when they consider a flexi cap fund. A, it should be well diversified because that's what the intention was. That if you are flexible, then the imagery of that outcome of that flexibility is that it should look like a diversified fund. It should look like a proper thali, not a very disjointed thali. Secondly, it should also come that it also manages some of the risk mitigations, which I talked about, that it is diversified, therefore the risk is being managed. It comes with a decent track record. You are getting investments into large, mid, and small into different sectors. So it should look flexible enough. That's one way of looking at it. If it comes from a decent fund house, it has a certain track record that also helps the investor. Overall, the investor should be also looking at that whether the fund is staying invested, is there cash calls in the fund, or the fund is in line with what the current market situations are. These are a couple of points which an investor can look at while choosing A flexicap fund versus B. I would consider personally that something which is well diversified, has a flavor of across sectors which are relevant to India, which have a certain long-term vision, is also fulfilling anyone's long-term goals which are beyond 5 to 10 years. That is where I would consider a flexi cap fund, and these are the basic metrics it should come up to so that it qualifies for anybody's investment decision.
And any mistakes to avoid, any myths that you would like to debunk when it comes to flexi cap funds, Mayur?
I would say that to have the right expectations, not to expect them to be trailblazers, because that's not what they are supposed to be. Any core portfolio product should behave in a sedate manner, but be in line with the markets, in line with the benchmarks. That is one of the things, not to expect very trailblazing returns, because they come with a certain risk. Sometimes those risks play out when markets are not doing well. They should not be illiquid portfolios. They should be fairly liquid, flexible, because as you are flexible, you need to move out of A to get into B, right? So you should have, it should be a two-way street. So these are important factors which should be taken care of, and not to, but as it is core portfolio, it should be a very sedate performance, consistent outcome, because that will result in investors reaching their investment goals.
All right. And how popular are they as an investment products? Because as you mentioned, they are a great entry point for a lot of the new investors. And we have seen retail participation in the markets grow exponentially via the route of funds. So just to give us a recap, how popular are flexi cap funds in the Indian marketplace?
Uh, Gautam, they are pretty popular. I would say why? Because today the category is roughly approximately around 2.4 to 2.5 lakh crores. That category today, as of December end, had about 1.24 crore folios in this category. It is the second largest number of folios it has in a category, just behind ELSs as a category. So majority of the investors who would look at investing in equity mutual funds, definitely in their top 2 or 3 allocations are flexi cap funds. So in that sense, they are very mainstream, and they have started collecting a lot of AUM, and it is definitely the core portfolio of many investors. So anybody who's considering a flexi cap fund would actually be considering it for a larger amount of their allocation for their futures. So I think it's a very
All
mainstream category.
All right, Mayuk, as we look to wrap things up here, any key messages that you would like the audience to take away from the conversation that we've had on Flexi Cap Funds?
So I would say they should definitely consider it. There is beyond any doubt. Keep on investing. SIP is one of the best ways of investing into flexicap funds. It should be a core part of their portfolio, and they should have the right expectations from these products. Because as long as the core of your portfolio is anybody's portfolio is correct and investment invested in the right pockets, I think they should have a very strong and consistent investment experience. So have the right, but keep on investing and stay invested would be my key takeaway for anybody who's watching this.
All right, stay invested and fulfill your goals and choose the right options which suit you and your goals. Well, that brings us to the end of today's discussion. Mayuk, thank you so much for taking the time and sharing with us your insights on this topic.
Thank you so much, Gautam, for having us for this session. Thank you.
Absolutely. And of course, thank you to our viewers for tuning in as well. Before we sign off, I'd also like to thank Mirae Asset Mutual Fund for partnering with us for today's insightful session. Till next time, this is your host, Gautam Srinivasan, signing off. Have a great day.
Thank you.
Thank you.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.